What's going on, guys? My name is Dee Anthony, and in this video I want to show you guys how we can use the lower time frames to find picture perfect entries and get into these potential day trades, these potential scalps, and even potential swing trades based on your level of comfortability when it comes to trading. Whether you would like to be a scalper, you'd like to be maybe a little bit of a longer term intraday trader where maybe you're holding for an hour or two at a time, or maybe you're just looking to swing trade and you're looking for those best possible zones that you can identify in the market and kind of get in at a really good price. So everything, regardless of what time frame we're going to be trading on, whether it's the 1 minute, the 2 minute, the 5 minute, even the 15 minute, is all going to start from the macro perspective. And that's going to come from the daily chart. And what we want to look for and what we want to identify on the daily is, what are we doing, right? Are we in an uptrend? Are we in a little bit of a holding pattern, meaning level of, consolidation, a little area of distribution, or are we in an uptrend? Now, if we take a look at the NASDAQ 100 and we kind of just look at the last week to 2 weeks worth of price action, you can see that for the past 1, 2, 3, 4, 5, 6, 7 trading days, which is about a week and a half worth of data, we've been on a little bit of a downtrend. Now, if we also look a little bit farther to the left, we can see that we are coming into a previous area going all the way back to August, an area that has acted as support. So first things first that you need to tell yourself is that if this area has held before, August the 18th, if this area has held twice, September the 27th, also October the 4th, also October the 6th, you can see that we're back in this zone. So maybe, just maybe, for the short time being, going into next week, obviously today is the 21st, it's Saturday, so we still got the weekend to kind of let the markets kind of unfold and digest. But maybe going into the 23rd, 24th, 25th, there could be an area of opportunity to potentially take a shorter term time frame trade where maybe we can get in on a little bit of a bounce. So what I'm going to do is I'm going to start marking out some demand zones as well as some areas of supply, which is going to be our resistance. So that way, when we go down to the lower time frames, we can kind of have these zones that we can be ready to play, and that are also going to provide some pretty good stop losses along the way as well. So what I'm going to do here is I'm going to take at least 3 to 4, multiple touch points. In any time I'm kind of making my supply and demand zones, I want at least 2. But if I can get 3 to 4 areas where price action has previously touched prior, it's a lot more concrete and a lot more strong for me. So what I'm going to do is I'm going to go here and I'm going to create this box, and I'm going to make a little bit of a zone. Because remember, as much as we would like to pinpoint the exact price down to the penny, price action, it wicks up, down, it creates a little bit of a zone. So we got to give ourselves a little bit of a cushion. I'm going to look at the first low that we had here going back to August. I'm also going to take a little bit of this low wick here from the 26th of September, the 27th. I'm going to take a little bit from the 3rd of October. I'm going to take the lows, the swing lows on the 5th, as well as the 6th, and as well as the 20th. So what I'm going to do is I'm going to drag this box across. This is going to create my supply zone. And I'm just going to kind of make it go extended out, so that way I don't have to kind of continuously, make it longer and longer. What I'm then going to do is I'm going to turn this box into green, just due to the fact that for my sake, for my eye's sake, every time price action has got here, buyers have kind of stepped in. Now, does that mean that we don't lose this area of demand? Of course not. If we continue to push lower and we break through the bottom, there's going to be a couple of ways that you need to play it on the smaller time frame, right? You're going to need to see it close below that, consolidate under, and then put in a new low, or you're going to need to see it break the bottom of that demand zone, give us a new low on some type of wick, see some type of bounce, and then some type of retracement where we then get rejected off a supply zone, and we can take that as a short, or we can take the loss of the new low as a short. Now, again, because we don't really have any levels down below that we can use as supply zones, we're just going to use this 200 period moving average sitting down here at around 13,950. Now, to the top side, I've got a couple of clear areas way up here to these last swing highs that we were looking at in August as well as September, and a little bit of a higher low that was put in here in October. So what I'm first going to do is I'm going to take the most recent swing highs before the new low, and I'm going to also make a supply zone up here. So this is going to be my upper supply zone. You can see we've got a date here on the 9th, as well as, on September the 1st, as well as September the 11th, the 12th, the 14th, as well as the 15th. So this area is acting as an area of resistance, right? So what I'm going to do is I'm going to take a little bit of the body, right, and the wicks, and I'm going to make this a supply zone. So this area is going to be an area of resistance. Same rules are going to apply to that area of demand that we talked about down there. And I'm going to make this red. So red is letting me know we've got some sellers in this area. Now, again, here's our kind of big zone, right? This is our big range that we have here. But what about everything else in between, right? You can see here we've had 1, 2 multiple touch points here. We had a little bit of area of rejection here that's correlating with this. You can see this little swing high here before it was rejected, acted as an area of supply. But if we keep going to the left, we can see that it was also acting as an area of resistance before we broke through, but also acted as an area of support. So I could say that this last recent swing high that we had here on October the 11th, as well as the 12th, is also matching up with previous resistance. Previous resistance tried to act as support before broken down, and then also acted as support over here. So this area is also valid as well. So what I am going to do is I'm going to create another supply zone here, okay? So this is also going to act as an area of resistance that I'm going to want to be well aware of if price action does decide to come up into this zone. So again, because it's a level of supply, I'm also going to turn this into red. Okay, so now we've got a few areas that we can kind of start to play here. And if we go down to the smaller time frames, right? So what we're looking at now is the daily chart. We're going to swing down into the 4 hour and kind of see, are we missing any levels? You can see here, area of demand, area of support, and now we're back in this zone. So is it going to act as an area of support for a little bit of a dead cat bounce? Last swing high that we had here, resistance before the big fall, resistance before a big fall, a little bit of a gap up, right, over our zone here, and then try to act as an area of support. So this area is definitely valid. Now, again, we're going to have a little bit more on the 4 hour. We're going to have some resistance here that we broke out of and then tried to backtest before losing. So maybe I'm going to have a little bit of a zone here, right? I just want to kind of point this out. Look at the last decline, look at the bounce, look at the rejection spots on the 4 hour time frame, bounce, and then once we got over it, we tried to hold as support before breaking down. This area is definitely valid as well. So I'm going to take the top wick here, I'm going to drag this across here, and I'm going to make a nice little zone where this could potentially be a mini sneaky area of resistance as well. Again, it's acting as an area of resistance or supply if price action is trading under it. If we were trading over it, it would be an area of demand. If we were trading over it, it would be an area of demand. If we were trading over this zone, it would be an area of demand. All the areas, if price action is below, is going to act as an area of resistance. Then we come down to the 1 hour time frame and we kind of see, what's exactly going on. So let's look at the last area that I just drawn out here from the 4 hour. On the 1 hour chart is acting as resistance, resistance, resistance. Once we broke through, we didn't necessarily backtest it, but we gapped below. And then once we got over this zone, we came to our next area of resistance. And look at the zone that we just drew from the 4 hour. We came down, tagged it to a T, bounced, backtested, bounced, backtested, bounced. When we came back down this last time on last Wednesday, we really had trouble. We started to lose it, crack it. We tried to reclaim it. Never happened. Area of resistance here for the next downturn. So how we play the smaller time frames, now that we've got those levels marked out from the daily, the 4 hour and the 1 hour, we come into our 5-minute view. You can also use a 2-minute or a 1-minute, but now we have these kind of zones to play with, right? So notice how it's a lot much more cleaner now that we're on the 5-minute time frame. So notice how if we were to just kind of zoom in to Friday's price action, and I take a few of these supply and demand zones, look at how we came down into this demand zone, bounced, came down, and now we're trading inside. If we start to push higher off this demand zone, potentially we can use the lows as our stop, and we can kind of sit here and play this into the 200, play it up to this 5-minute resistance zone, and actually start trying to shoot towards that 15,000 mark. So this potentially can be a hell of a spot to try to get long on a potential dead cat bounce. Now, does this mean that the market's going to go all the way up to all-time highs? Of course not. But is there enough room between 14,600 into 15,000 to kind of make some money along the way? So as long as we stay above this demand zone, we are confident to hold. Now, what is to happen if we did lose this zone? Okay, let's say we lost this bottom demand zone. How would we necessarily play this to the short side? So how we would play this to the short side is if we come down and we lose the bottom of this zone, which is currently sitting at around 14,585. There's two ways to play this from a smaller time frame. You need candles to close below that zone, and then we need to consolidate and or bounce and then re-lose those new lows. Now, once we lose those new lows, you can definitely start to take that short position into that bigger time frame demand zone, which is a 200 period moving average on a bigger time frame. Or again, I know a lot of people will put this line down here at the chart. They'll have that level of 14,584. They'll take that initial move, not understanding that the first move below that is always going to wick down or put in a new low and then immediately retrace or immediately go sideways. So a lot of people try to take those new low of day breaks and they end up getting stopped out or losing a lot of money because they didn't allow the trade enough time to kind of pan out. But again, this is how you can set up your charts. This is how you can start to use the smaller time frames to your advantage because you understand kind of the macro picture of what's exactly going on. Guys, if you're interested in kind of learning more of the process and understanding my strategy and the way that I trade on a day in and day out basis, I trade options, I trade futures. I also, am funded with a couple of the different prop firms that are out there, Top Step and Apex. So if you have any questions around that, I also do one-on-one coaching for mindset, psychology, and trade plan building. So again, if you guys want access to the community where we're trading live each and every single day, where I'm talking just like this, going over levels just like this, kind of pinpointing the areas of interest where I want to get into the trades, and you want to be able to hear that and conversate with me live, not just have a bunch of signals thrown out there and you have no idea what's going on, definitely join evolutiontraders.com. There's only one spot left that I have that needs to get filled before I kind of close that enrollment. So it's on a first come, first serve basis. I'll see all of you guys on the inside. For the rest of you guys, if you did stay to the end of this video, I truly, truly appreciate it. If you can do me something of a favor, a little bit of a solid, please like this video, share this video, comment on this video. It helps me out tremendously with the YouTube algorithm. I would love to get this out to more traders so they can all kind of see exactly what's going on and get some good knowledge, right? That's the main thing. There's a lot of content out there. There's a lot of knowledge. There's a lot of influencers, so to say, in this space, but a lot of the knowledge is not that good. A lot of that knowledge is, not realistic. A lot of that knowledge is a lot of hype, more so than actual concrete evidence. I try to keep it real with everyone. You will lose trades, but you can also be very, very profitable once you start to have a little bit of confidence in your edge and your setups, and you can start identifying these setups and taking them with proper risk management and able to know where potentially you should be taking profits so you can kind of negate some of these losses by holding things for too long. So again, if you would like to join the community, you would like to start working with me and trading with me each and every single day live, that link is going to be down in the description box below. Again, like, comment, subscribe, and I'll see everyone back on the next YouTube video.